let's get this party started, right? And what better way to do that than with a deep dive into the world of investing?
Yeah, that's right.
I mean, come on, it's been an absolutely insane year for the market.
It has been. It really has.
I think we all want to know what's next, what's in store for 2025, so that's exactly what we're going to do today. Unpack those expert predictions.
Well, let's kick things off with a quick recap of 2024, huh? I mean, we saw some serious fireworks in the market this year. The S&P 500 up over 23%.
Wow.
That kind of growth, I mean, it really gets investors talking.
Sets the heart racing, that's for sure. And speaking of things that get investors excited, can we talk about gold for a second?
Oh, yeah.
I mean, shining bright with a nearly 28% gain, safe haven narrative is alive and well, it seems.
You know, amidst all that excitement, oil decided to sit this one out.
Right? Just kind of chilled.
Yeah. Ended up with a teeny tiny gain, just over 0.2%. What's going on in the energy sector?
What's going on? What's in store? But you know what we can't ignore? The Bitcoin in the room.
Right, Bitcoin. Yeah.
Over 111% growth this year. Unbelievable.
It's incredible, and it really does beg the question, doesn't it?
Yeah.
Is this the peak, or is there more room for Bitcoin to run?
Yeah, everyone wants to know, right? Is this the top? Is this just the beginning? What's fueling this growth? But let's shift gears a little bit. We've talked about all these incredible gains in 2024, but analysts are already looking ahead, making their predictions for 2025. What are they saying?
Well, they're feeling pretty bullish overall, I gotta say. Of course, you know, predicting the market is a bit of a guessing game.
Sure is. Crystal ball kind of stuff.
Yeah, exactly. But these forecasts, you know, they can give us some clues.
Right, yeah. Give us a little insight.
Right, into which sectors are expected to outperform. And this year, one sector is really standing out from the crowd.
Okay, I'm intrigued. Lay it on me.
Artificial intelligence.
Isn't that the buzzword that's been like floating around for years? I mean, it's hard to know what's hype and what's reality with that.
Yeah, no, you're absolutely right. It's been around. But I think the difference now is that we're actually seeing AI's potential, like real-world applications.
Right, yeah, things are happening. It's not just talk anymore.
Right, and BlackRock actually, in their 2025 outlook, they highlighted the massive investments that are being made in AI infrastructure.
Okay, so there's money going into it. That's always a good sign.
Exactly. We're talking powerful chips, sophisticated models, and applications, just everywhere you look.
Wow.
It's really exciting, and it's this, infrastructure
Right.
that's going to drive even more growth in the coming years.
Okay, so not just hype. There's substance behind the excitement this time. But how does this translate into, actual investments? We can't exactly buy stock in AI or...
Right. We need to identify the specific companies, the players that are going to benefit from this AI revolution. And that's where things get really interesting. Think about all the computing power that's required to run these complex AI systems.
Yeah, a lot of juice.
A lot of juice. Where does that power come from?
Utilities.
Utilities, exactly.
Okay.
The energy sector, specifically those companies involved in power generation and distribution, they're going to be huge winners in the AI game.
Okay, so there's this, unexpected link between the digital world and the very real world of energy consumption. Huh.
Exactly. In UBS, for example, they're predicting huge, transformational growth in the power and resources sector, specifically because of this, increased demand from data centers.
Wow, okay.
And UBS isn't alone. JP Morgan, Goldman Sachs.
Big names.
They're all recommending overweighting utilities in their portfolios.
Interesting. So this is this is a bit of an under-the-radar play.
It is.
But it could pay off big time.
Exactly.
Okay, so we've got AI, we've got utilities, but while we're talking about sectors that are poised for growth, I think we got to mention financials.
Oh, absolutely. The banks.
Yeah, they always seem to find a way to stay relevant.
They do, don't they?
Mm-hmm.
And JP Morgan, in their 2025 outlook, they're suggesting that deregulation could be a major catalyst for growth in the financial sector.
Deregulation. So less red tape, more freedom.
Exactly. Imagine what could happen if those restrictions were loosened a bit. If financial institutions had more room to maneuver.
More room to innovate.
Exactly.
Okay, so that sounds like a recipe for big profits, potentially. So we've got AI, we've got utilities, we've got financials, all kind of interconnected, all potentially driving significant growth in the coming year. Starting to get a sense of where investors might want to, focus their attention.
Absolutely. And I think what's really fascinating is how these sectors They might seem unrelated on the surface, but they're all converging.
Coming together.
Yeah, they're all playing a part in shaping the future. It's a reminder that, investing isn't just about picking individual stocks. It's about understanding the big picture, the trends.
The forces that are shaping the world.
Exactly. Speaking of individual stocks, though,
Ooh, yes.
let's get down to brass tacks.
Let's do it.
Morningstar, for example.
Yeah.
They've got their eye on a few potential winners.
Ooh, hidden gems.
Hidden gems, exactly.
Yeah. Love it. Tell me more.
Well, they're liking Devon Energy. It's a steady, low-cost provider in the energy sector, and they believe it's significantly undervalued.
Okay.
Their average price target is $50. Pretty impressive.
Okay. I'm starting to see why they call it a hidden gem.
They also like Dow, citing their high operating leverage as a key factor for profit growth.
Okay, high operating leverage.
Yeah.
Now, for those of us who, aren't walking dictionaries of financial terms.
Right. It essentially means that a company has, a high proportion of fixed costs.
Okay.
Compared to variable costs.
Yeah.
So as revenue increases, their profits can grow at a much faster rate.
So they're basically betting that Dow can scale up their operations and just, rake in the profits as demand increases.
Exactly. Smart move. Their average price target for Dow is $53.
A decent upside, I imagine.
Yeah, definitely decent upside.
But it sounds like we've got another expert weighing in with their top picks.
We do. Goldman Sachs.
Oh, Goldman Sachs.
They've got some interesting contenders.
Okay, I am all ears. Let's hear what Goldman Sachs has to say.
All right, let's dive in. So Goldman Sachs, they're pretty bullish on Fluence Energy.
Okay, Fluence Energy.
Yeah, and this is despite the fact that it actually took a bit of a tumble in 2024, down about 30%.
Okay, so not a great year for Fluence.
Not a great year.
Yeah.
But Goldman Sachs, they see potential. They're predicting a rebound. Their average price target is $26.
Okay, so Goldman's taking a bit of a gamble here, going against the grain, betting on a company that's been, struggling. What's behind this optimism? What do they see in Fluence Energy?
Well, Fluence, they specialize in energy storage solutions.
Energy storage, right?
Yeah, particularly large-scale battery systems.
Yeah.
And as the world, moves towards renewable energy, things like solar and wind.
Right, which are intermittent.
Exactly. You need a way to store that energy.
Makes sense.
And that's where Fluence comes in.
Okay, so they're playing the long game, betting on the future of energy. I like it.
Yeah.
Any other dark horses in the running?
There's another one that Goldman Sachs is pretty excited about.
Okay, hit me.
In-phase energy.
In-phase energy. All right. Tell me more.
They're also in the renewable energy space.
Okay, so another bet on the future.
Yeah. Now, they also had a bit of a rough year in 2024, declined by about 43%.
Oh, wow. Even more than Fluence.
Yeah, a bit more. But Goldman Sachs, again, they see this as a buying opportunity.
Interesting. So they're not afraid of a little volatility.
Not at all. Their average price target for Enphase is $94.
Okay. And that gives us a potential upside of...
It's pretty substantial.
Okay, so double, triple-digit potential gains. Pretty enticing. What's the story with Enphase Energy? Why is Goldman Sachs so bullish?
Well, Enphase, they're a leader in microinverter-based solar and battery systems. They basically make solar energy more accessible.
Yeah.
More efficient for homes and businesses.
Okay, so tapping into that growing trend of sustainable living, people wanting to, generate their own energy.
Exactly. As the demand for residential solar continues to grow, Enphase is in a prime position to capitalize on that.
So it's a feel-good investment and potentially a very profitable one. All right, that's Enphase Energy. Does Goldman Sachs have any other picks up their sleeve?
They do. You might know them as AMD.
Oh, AMD, yeah. Big player in the tech world.
Yeah, exactly. And they're projecting that AMD could reach $184.
$184.
Okay.
And how did AMD do in 2024?
They actually had a slight dip, about 8%.
Okay, so a little bit of a down year, but Goldman's still optimistic. And what would that $184 price target represent in terms of potential gains?
Oh, it's looking like a very healthy return.
Okay, so AMD could be a real winner in 2025.
Potentially, yeah.
Yeah.
But I do have to mention there's a little bit of a disagreement about AMD. Bank of America, they actually just downgraded them from a buy to a neutral.
Oh, interesting. A difference of opinion between the experts. That's what makes the market so fascinating, right? You never know for sure. But it also highlights how important it is to, do your own research. Don't just blindly follow one analyst's recommendation. So when you see these conflicting opinions, how do you sort it out? How do you weigh those different perspectives and make a decision?
Yeah, that's a great question. I think when you see those conflicting views, it's crucial to look at the reasons behind them. Why are those analysts disagreeing?
Right. What are they seeing?
Exactly. So, in the case of AMD, Goldman Sachs might be focusing on their strong position in the gaming and data center markets,
Okay, that makes sense.
while Bank of America might be more concerned about, say, competition.
Right. Or maybe supply chain issues or something like that.
Exactly, things like that. So it's really about understanding those different perspectives and then, coming to your own conclusion.
Right. And that conclusion might be different depending on your own, risk tolerance,
Yeah,
your investment goals.
absolutely.
There's no one size fits all approach, right?
Right.
Okay, so we've been talking a lot about individual companies, but let's zoom out a little bit and talk about the overall market. What are the predictions for 2025? Where do the experts see the S&P 500 heading?
Yeah, good question. And I think if the past couple of years have taught us anything, it's that predicting the market is a fool's errand.
Absolutely. It's a wild ride.
It really is. I mean, who predicted those back-to-back 20% gains in 2023 and 2024?
Nobody.
Nobody. And yet, here we are.
Yeah.
So, I think it's a good reminder to always be humble. Acknowledge that the market can surprise us.
It always does, always keeps us guessing. But surely the experts have some educated guesses, some insights. What's the general consensus?
Well, according to FactSet, the average analyst price target for the S&P 500 is 6,678.18 by the end of 2025.
Okay, 6,678.18. Got it.
But of course, that's an average.
Right. So some analysts are more optimistic, some are more pessimistic.
Exactly. And it wouldn't be any fun if everyone agreed.
So who are the optimists? Who's saying the market's going to go way up?
Well, interestingly, Morgan Stanley and Goldman Sachs, they're both aiming for a more conservative 6,500.
Okay, so a bit more cautious.
Yeah, I think their forecasts are probably taking into account some of the potential headwinds.
Right. Geopolitical uncertainty, always a factor.
Exactly.
Okay, so Morgan Stanley and Goldman Sachs, a little bit more cautious. Who's on the other end of the spectrum? Who's feeling a little bit more bullish?
That would be Oppenheimer Asset Management. They've got a target of 7,100.
7,100. Okay, so they're betting on a continued rally.
They are. They're basically saying that the conditions are ripe for continued growth.
Interesting. So we've got a range of opinions. It's fascinating to see how these different perspectives play out. But it also kind of makes you wonder, how do you, as an investor, how do you evaluate these predictions? How do you cut through the noise and figure out what's actually meaningful?
Yeah, it's a great question. And I think it comes down to understanding the rationale behind each prediction.
Yeah.
What are the assumptions that they're making? What risks and opportunities are they considering?
Right. So it's not just about the number. It's about the thinking behind the number.
Exactly. And it's also important to remember that these are just predictions. They're not guarantees.
Right. They're educated guesses.
Exactly. And the market has a mind of its own.
It does.
So be prepared for anything.
Always expect the unexpected. Okay, so we've laid it all out, right? The trends, the sectors, the picks, the predictions. But now let's talk about you, the listener. What does this all mean for your portfolio in 2025?
Yeah, it's all well and good to have all this information, but it's got to be useful.
Exactly. We don't want to just leave you hanging with a bunch of data. So think of this deep dive as giving you a toolkit.
I like that. A toolkit.
Right. Not a set of instructions. You get to choose how you use it. So we've given you the tools. How do you use them?
Well, I think the first step is to kind of take a step back and think about what really resonated with you from our discussion. Was it the potential of AI?
Yeah, AI was pretty mind-blowing.
It was. Or maybe it was the surprising connection to utilities.
Yeah, who knew data centers needed so much power?
Right. Or maybe it was those undervalued opportunities that Morningstar and Goldman Sachs were talking about.
Yeah, those hidden gems.
Yeah.
So it's like choosing which tool from the toolkit you want to use first, right?
Exactly. Figure out what sparked your curiosity, and that's your starting point.
Okay, so let's say AI really caught your attention.
Okay, AI.
What's next?
Right.
What do you do with that?
Well, you got to dig deeper. Explore those areas that interest you and see how they fit with, your own investment goals,
Yeah.
your risk tolerance.
Right, because everyone's different.
Everyone's different.
Yeah.
And knowledge is power, right?
Hmm.
Especially when it comes to investing.
Absolutely. So don't just take our word for it. Do your own homework. Read those analyst reports. Really get to know the companies and the sectors that you're interested in.
Exactly.
Yeah.
And don't be afraid to, challenge the experts. Question their assumptions. Come to your own conclusions. The market's constantly changing, so you got to stay informed.
Right. It's like being a detective, almost.
Yeah.
Piecing together the clues.
It's exciting.
It is exciting. But it can also be a little bit daunting, right? There's so much information out there.
Oh, absolutely. And I think that's where a healthy dose of caution comes in.
Yeah.
Don't jump into anything that you don't fully understand.
Yeah, you don't have to rush into anything.
Investing is a marathon, not a sprint.
Slow and steady wins the race, right?
Right.
Take your time, build your knowledge, build your confidence, and then make those decisions that feel right for you.
Absolutely. And of course, never forget the golden rule of investing. Diversify.
Ah, yes. Don't put all your eggs in one basket.
Exactly. Spread your investments across different sectors, different asset classes. It helps manage risk and build a stronger portfolio.
Makes sense. Now, even with all the research, all the planning, there's still an element of, well, uncertainty.
Of course.
I mean, if it were predictable, we'd all be rich, right?
Right.
But that's part of the excitement, isn't it? That challenge, that risk.
Exactly. It's what keeps things interesting.
So as we wrap up, I just want to say this. It's your money, your decisions, your journey. It's about taking control of your financial future. And maybe, just maybe, you'll discover that next big thing, that hidden gem that nobody else saw coming.
That's what makes the market so fascinating. It's full of surprises.
So cheers to a new year, cheers to new possibilities, and cheers to all of you out there who are taking charge of your financial future. We hope you have a prosperous year and make some savvy investment choices.